What is up, flippers? It's Marcel here. Here I am with the recap video about yesterday's Euro USD short trade, which ended up in profit. I took 50% off of the whole position size in partials, and that was around 6 restore ratio, if I remember well. So yeah, lots of you guys also took that trade because this trade was forecasted in the weekend forecast video. So everyone who saw that video would have been able to take this trade because everything that was explained in the weekend forecast happened perfectly in this video. I mean, in this trade. So yeah. If you haven't seen the weekend forecast video, please just check it out because it's so important to understand the higher time frame context around this trade, because I won't explain everything again. I won't explain what has happened here, what has happened on the 4-hour time frame. I will just simply explain what the plan was on this day. So I won't give you a higher time frame context. It has been given in the weekend forecast video. So once again, please just check that video out. So here we are on the 15-minute time frame. What was the plan for this day? So basically, we had two supply areas marked out. First one was up here. This was the high importance, really high importance supply level. Second one was here, but it wasn't that important to us because it had no liquidity below it and it had liquidity above it. So I even said in the video that I'm expecting this liquidity to be swept out. And actually, I'm expecting a reaction here on this supply and not really on this one, but we had it mapped out too. We had another demand. I mean, actually two demand areas marked out. First one was here, second one was here. So basically the plan was pretty simple. As I said in the video, both of the short and long trades had the same probability to play out. So we applied the same pro trend rule for each of these trades. For the supply and for the demand, we applied the same pro trend rule because each trade, I mean, each zone, each demand and supply had the same amount of percentage in outcome. So basically, when I posted the forecast video, price was somewhere around here. So it hasn't reached the supply yet. It was somewhere around here. So we had basically two outcomes, short-term outcomes. First one is if price reaches the supply up here, we will be waiting for a change of character and shorts down to the 50% of this demand, because there low percentage mitigation has already happened on this demand. So in this case, we can always expect a deeper mitigation. This was the first scenario, if the supply is getting mitigated first. If not, if price comes down to this demand, then a simple long scenario on this demand, or if price breaks below this demand, then waiting for the next demand mitigation and the long again. These were the two scenarios, short-term scenarios that we were waiting for. This could have given us a really nice short trade, 1 to 10, 1 to 8 risk-reward ratio, short trade targeting this demand. This could give us a really nice long trade targeting this supply or this supply. If these scenarios couldn't happen, then if price breaks above this supply region, then we would have been able to take longs all the way up to this next supply targeting this liquidity sweep. And if this supply is getting mitigated, we can wait for the change of character here and shorts all the way down to the 50% mitigation of this 5-minute demand region. These were the plans that we were waiting for yesterday. These 1, 2, 3, 4, 5 plans. These 5 plans that we were waiting for yesterday. If any of these plans happens, we can enter in a trade. If neither of them happens, we are not trading on that day. You know the drill. You know how it works. You know what we are doing with these forecast videos, with these markups, and you know how to react on them. So anyone who saw that video could catch the trade, because the trade has happened on this upper supply region. Price has just mitigated this supply, printed a confirmation there, a really high criteria confirmation, and the perfect entry opportunity was shown. So let me just switch to the 1-minute time frame. So first of all, I will explain everything starting from this region. So, we were waiting for either the mitigation of this supply that I'm currently grabbing or the mitigation of the demand. If the supply, sorry, let me just zoom in. If the supply is getting mitigated first, we take shorts or long if it breaks, or if the demand is getting mitigated, we take longs after mitigation and change of character. So let me just play price forward. Let's see what has happened. Price actually formed a little, or not even a little, but some amount of liquidity right here in the form of double taps. This double taps has been swept out into the low percentage region of this supply. And the mitigation of the low region, like 5% mitigation, has happened. And price gave a rejection and reaction and basically changed the character with a wick. Or, I mean, this is the character changing point, but this is just a demand character changing point. This wasn't a real structural low point character changing point. It just left the liquidity behind. Actually, I was monitoring this setup, but I wasn't really going to enter here because this was a low percentage mitigation, and this is the type 1 trap. You know how the traps work. There's an educational topic video about this topic, and there's an educational picture about this topic also. You know how this works. If you don't, search up for these videos. It's in the core videos channel in Discord and core pictures channel in Discord. So yeah, I wasn't going to enter here because it was all part of the trap for the deeper mitigation. Let me just play price forward. Price mitigated the supply on the deep region, but it immediately broke above it. So the break of the supplies happened. At this region, I was looking for longs. I did switch to the 5-minute time frame. I marked out this demand right here. I was waiting for the pullback down to this demand and longs up to this supply. But actually, it hasn't happened. Switching back to the 1-minute time frame, you will see that it hasn't happened. Price just straight up went to the supply without giving any proper pullback on the 5-minute time frame. Basically, there was no pullback. I was only monitoring this region for a long because that's where the inefficiency was. Perfect volume candles. I mean, literally perfect volume has been kicked in from this demand region. And yeah, this was all efficient. There was no inefficiency in this region. I wasn't looking for longs there. I was only looking for this region right here. But yeah, the supply has been mitigated. So what can we do in this case? Of course, the liquidity has been swapped out. It has been wiped out. So what do we do in this case? We followed the forecasted plan. And what was the forecasted plan? If this supply is getting mitigated, we will wait for a change of character and shorts down to this demand. Okay, so what has happened? Price just mitigated this supply, gave a perfect V-shaped rejection, mitigated the full region of it. Then it reversed to the downside, leaving a flip zone behind. There was a less recent demand, that has a, let me just quickly draw it up, sketch everything up, then explaining, so changing the color. Yeah, so here was the less recent demand that has caused the less recent push that mitigated the supply and broke this high point. So if this low point and demand breaks, there will be a change of character or a flip, right? Technically, in this case, there was a flip, or not a flip, but a change of character, whatever you call this one. Price changed the character or flipped the demand. It doesn't really matter how you call it. I will mark it as a change of character. The change of character with an inefficient volume push has happened from this supply, right? So this supply, this candle, initiated the volume and inefficiency in the market. You can see that in between the low point of this candle and in between the high point of this third candle, there's volume, there's inefficiency. So this one caused the body closure below the demand even. So that was closed by body, not just a wick, which is even stronger than a wick closure. So yeah, in this case, what do? We enter here. So yeah, basically that's the thought progress behind the whole trade idea. Simple, dirt simple. I mean, literally dirt simple. I will just count the criteria also. We'll explain the target points in a minute. So this was the final TP that I was targeting right here. The demand that I showed on the weekend forecast that I'm going to target this demand region if it's getting mitigated. If the supply is getting mitigated, I will target the demand. And yeah, that's it. I will explain the partial taking point too, but let's just talk about the criteria. So the first criteria was the higher time frame mitigation, obviously. Second base criteria was the inefficiency. Inefficiency, as I explained, and volume was shown up here. Third base criteria was the pro trend, because basically 15-minute was pro order flow. 15-minute was coming in a pro order flow bearish structure, all the way down to that demand, swapped out liquidity, this liquidity. After a liquidity sweep, it just continued the overall movement. I always explain, like, let me just switch to the 15-minute time frame, you will understand. I always explain with the 1-minute scenario. So just imagine this bearish structure on the 1-minute time frame. 1-minute time frame is doing this bearish structure. Then it leaves an unmitigated supply behind and leaves liquidity for that supply. Then it breaks the structure again to the downside here, right? So here's the last recent break of structure, meaning you're marking out this supply here as the last recent 1-minute supply. But above this supply, there's this liquidity line. There's this perfect liquidity line. So if you're thinking about 1-minute entries, where would you enter here? Would you enter on this 1-minute part of liquidity supply, or would you wait for the mitigation and set a limit order on this higher supply, which has liquidity below it and not directly part of the liquidity? Obviously, you're going to enter here on the upper supply. You're going to set a limit order here. Meaning if price breaks above this supply, this less recent supply, sweeps the liquidity out, it won't count as a change of character here. This is not a change of character. This is just a simple liquidity sweeping movement. You know, this is how you map the structure on the 1 minute time frame. So why the 50-minute time frame will be any different? Exact same thing on the 50-minute time frame. We had a bearish structure to the downside, right? Here was a nice supply that caused volume and inefficiency to the downside, and there was liquidity below it. And there was this less recent 50-minute supply that was part of the liquidity directly. So if this would have been the 1 minute time frame, you wouldn't set a limit order here on this supply. You will wait for the sweep out of this liquidity and enter here on this next supply, right? That's what you will do on the 1 minute time frame. So why the 50-minute will be any different? So basically the order flow didn't change at the break of this supply. This was just a simple sweeping movement that sweeps the liquidity out to continue the overall bearish movement. So yeah, the order flow was pro order flow. That's the third criteria. For the base criteria was the liquidation. Of course, perfect liquidity has been swept out into this region. So when all of the base criteria are there, we can add up our variables. First variable criteria was the change of character. Obviously, sixth criteria was the 50% mitigation or more than 50% mitigation of the higher time frame area. Seventh is the V-shape rejection coming up, creating a V-shape rejection. Eighth one, that price wasn't coming from unmitigated opposite-sided higher time frame zone at this region. Ninth one was the strong pro-corrective pullback. I did count this criteria because price was really correctively coming back up to this supply. And yeah, sorry, what am I pressing and why is it lagging? So it was really correctively coming back up to this supply. You can see that this is all efficient. I mean, there's literally no inefficiency in this region. There's one inefficiency here in this region only, but this is again all efficient. And shorts are much stronger in this case for me. Coming back, the 10th criteria was there was no combined liquidation, obviously, but the countable 10th criteria was the liquidity to target. This was all liquidity to target, a huge liquidity trend line. And of course, the low percentage mitigation was a liquidity target too. So this trade had 10 criteria, and we entered on the only inefficiency and volume creating 1 minute supply. So there was even no confusion around the extreme or decisional. This was the only zone where you could enter because there was the only inefficiency, nowhere else. And period. That's it. 10 criteria trade. That's how I executed this trade. I believe it was pretty simple. Where am I? Here. And yeah, let me just explain the partial taking point, but let me just remove all of the criteria pretty quickly. Okay, so partial taking point. Where did I take partial? You know, I was targeting full TP this demand region, and I took partial on this less recent 50-minute demand area. So that was the last 50-minute demand that wiped out the liquidity. Basically, it was a substructural demand, but it perfectly matched with the 50% of the whole position. It was at 6.1 risk reward ratio. The whole position was 12.7. So I just took partial on this demand region. I removed 50% off of my whole positions. And yeah, and that's the partial taking point. After taking partials, after I did hit my partial, it just reversed back up to break even. So it took my partials out, reversed back to break even, and took me out on break even. Then after a small hesitating inside of this region, so it didn't went up above this high point, not once. It just simply reached the TP. And yeah, that's it. I took 6 real ratio in partial. It wiped me out in break even. The rest of the position was wiped out in break even. Then it did hit TP without me. I booked money on this trade. I'm pretty happy with it. 10 criteria. We had to enter. The whole trade was forecasted. So that's it, guys. Hope you enjoyed this video. Take care.